The first week of December, a huge week in markets. The week of beginning Monday, November 30th, and ending on December 4th. Okay, let's talk about the events one by one, the key events, not all the events. It's very busy. So on Monday, we have German GDP, German CPI, consumer price index of the most important country, the one most sensitive to higher inflation. This feeds into the all Eurozone CPI figures. We have various German states releasing the figures during the day, with the final figure at 1 GMT. Last time we have two figures here: the national one and the HICP. I would look at the HICP year over year as the most important one. It stood on 0.2%, and now it's expected to rise to 0.3%. Okay. We have also pending home sales in the United States, and that's more or less it for Monday. Tuesday morning, early morning, is a huge day for Australia. We have lots of figures from China. The most important one from China is the Caixin manufacturing PMI. Okay, that's an indicator of Chinese manufacturing, and for Australia it means imports, what China imports from Australia. So that's really, really important. It stabilized last month, 48.3. Let's see if it continues rising. 50 points separate contraction and expansion. And this is an independent figure, more than the government figures, more than the manufacturing PMI from the government. There you see the NBS. So that's, of course, higher. Makes sense. The government has more rosy glasses than an independent institution. And the same day, same night, Tuesday, very early morning here, we have the rate decision in Australia. No changes expected, but any changes to the statement, perhaps something regarding capital expenditure, perhaps something regarding the employment. These are going in separate directions. Be very, very interesting. Remember, it's the last decision until February. They have a break in January. I believe they will want to keep the pressure on the Australian dollar. They like the current levels, but they don't want it to rise. So they'll be relatively happy, content, maybe not happy, but they won't be all rosy. Okay, so that's a really important night for the Aussie on Tuesday morning. Then we have some figures from Germany, the unemployment change, sensitive politically, and then final manufacturing PMIs for Germany, France, Italy, and also Spain and the Eurozone. Okay, in the UK, it's also manufacturing PMI has an impact. For those of you trading the Canadian dollar, we have GDP on Tuesday. Last time we had it's a monthly figure for September, so it's last month of Q3. So we'll also have not only monthly, but also quarterly. We have Canada is in recession, but a shallow one. Let's see how deep it is or not, or if it's emerging from that mini recession. Okay, that's important event for the loonie. And Tuesday we also have a first hint for the non-farm payrolls on Friday. So we have the ISM manufacturing PMI in the United States. Last time it stood on 50.1%, continuing its fall, showing weakness. 50 points separate growth and contraction, and US manufacturing, according to ISM, is on the verge of contraction. It's a small sector, but still carries importance because in the manufacturing sector, they actually manufacture stuff and not only sell services, even though the services sector is much bigger. Okay, things warm up on Wednesday. We have more from Australia, a speech by Glenn Stevens, and we have GDP from Australia. Quarterly figure, first and final, not like in the United States or in the UK. So also another important night for the Aussie. If the RBA on Tuesday says nothing special, then the GDP figures will have higher importance. Okay, if the RBA is very bearish or very bullish, these figures will be of less importance. Okay. Anyway, year over year we had 2% growth in Q2. Let's see if we have expectations already for Q3. No, not yet. Okay. We'll of course cover the events day by day. On Wednesday, we also have the CPIs from the Eurozone, 0.1% final figure for October. This time we have the preliminary, the early figure for November, and 1.1 in the core inflation. Let's see if these move to a different direction. I think it won't matter too much for the ECB, but it'll still move euro dollar. Okay. Then we have the ADP employment change, right? So it's around 200,000. Also a hint, it's only private sector, not public sector, not always fully correlated with the actual NFP from the government, from the BLS, but still worth watching and still always moves markets. A rate decision in Canada, Wednesday at 3 GMT. No changes expected, but let's see how the Bank of Canada sees the economy after the GDP figures, ahead of the employment figures in Canada on Friday, and with the new government there, with falling oil prices, lots to hear from them. They were relatively optimistic. Stefan Plows, let's see if he continues this way. And then we have a bigger event. Janet Yellen speaks at 4 GMT on Wednesday. It's the first out of 2 speeches. I think it's very important. So it's a testimony. I'll have more details, of course, about that on Wednesday, but it'll probably be her last public appearance before, next week, before the bigger, the all-important Fed decision on December 16th, okay? So she'll have the opportunity to cement a rate hike, okay, to tell us that that's coming for sure, okay? So that's an important event, of course, as well. Thursday, we have a few more figures from Australia, another in the Eurozone, more PMIs from the services sector, also in the UK, but no, not in the UK. Anyway, of course, the most important event is the ECB decision. I talked about it more in detail before, but let's talk about this once again. ECB created huge expectations in October. Their tendency is to beat those expectations, perhaps keep them a bit low towards the actual event and then beat them. ECB wants a lower exchange rate to help the economies. 2 things are watched: the negative deposit rate, and I think there they'll really beat expectations. Expectations stand on a fall from 0.20 to 0.30. I think it'll go to 50 basis points negative, perhaps a 2-tiered system, perhaps not. And expanding QE, extending and expanding. So from expectations stand on from 60 billion to 75 billion. I think that's more or less realistic. Anyway, I believe that Mario Draghi wants and can hit the euro hard, weaken the euro, supporting the Eurozone economies. Huge event on Thursday. The rate decision is at 12:45 GMT, and the press conference begins at 1:30 GMT. Okay, we'll talk about, of course, in every morning show about all these events. But that's not it for Thursday, okay? Thursday, December 3rd is a huge day. I might be using too many superlatives, but it's really it's an important week. We have Janet Yellen testifying once again. I believe it'll be at 3 GMT, perhaps 4. We'll have more details next week. This is one day before the non-farm payrolls. The Federal Reserve she'll probably have the details in front of her eyes. Because it's the second testimony, I believe that Yellen will not say anything new. It's mostly questions and answers. They're in Congress. Many of the questions are not that intelligent, pardon US politicians. So she'll be deflecting them. However, if we hear her saying something about employment, that could give us some kind of a hint. She'll be very careful and cautious not to do that, but it certainly is possible. Okay, so watch out for that. Less about monetary policy for December. She might do that already on Wednesday, but on Thursday, maybe she'll give us a hint about the NFP. Another hint for the NFP coming on Thursday as well, from the ISM non-manufacturing PMI. This was quite upbeat last month, 59.1. The services sector is doing great according to ISM. We also have the final figure from market. ISM is more important. Apart from Yellen, we also have Stanley Fischer. He's a relative hawk, okay. But anyway, Thursday is Yellen and Draghi in the scene. Friday, as always, the first Friday of the month, the most important event and probably dominating the scene is US non-farm payrolls. If the Fed is indeed data dependent and still hasn't made the decision, this will serve as a hint. We don't have the numbers. Last time it was a blockbuster report, 271,000 jobs gained. I think I still have the slide here. I can show you all the figures. Yeah, 271,000 jobs gained. More importantly, perhaps, or as important, wages finally broke above this resistance line of 2.3 year over year, rose 2.5 year over year. Excellent news. Finally, not only are Americans working more, they're also getting better salaries. Okay, so breaking out of range. I don't think it'll be as good this time. We don't have the official expectations. I believe it'll be only around 200,000, maybe a bit less. Unemployment rate could stay at the same level of 5%, which is very low, but also the participation rate is low. I would watch, as always, two things: headline figure in the non-farm payrolls and average hourly earnings, this figure year over year. You see this break out of range? So it's the highest since 2009. Okay, and in 2009 it was a year over year figure. So anyway, this is the most important thing to watch, because inflation in wages turns into real inflation. The Fed has two mandates: inflation and unemployment. Okay, so these are the two figures to watch within the important event of the non-farm payrolls. And also for those of you trading the loonie, we have the jobs report in Canada. Last time it was very positive, 44,000 jobs gained, and unemployment rate there is 7%. Remember, it's higher than the United States, but the participation rate in Canada is also higher, so it's a bit skewed. Okay, so yeah, that's a long preview because it's a really busy week.